Thirsty Thursday, back in the action once again. Thursday evening after all, time to get back to work. We got a lot to cover here tonight and get ready for tomorrow's Non-Farm Friday. It's Thursday evening, it's August the 6th, 2020. My name is Joseph as always, and welcome back to your nightly newsletter. Now, of course, my job tonight is to help us find the best entry setups for tomorrow. That's Friday's, not just any Friday, summer non-farm payroll Friday trading session. We'll get a great video in store for you guys and gals tonight. We're expecting a smaller window of opportunity, but that's not going to stop us from finding some great setups for Friday morning. I've got all the charts already in the background, as you can see. Got the oil, got the Eminis, and we got the gold on our radar for tomorrow. Lots of important patterns and setups I can see developing here in the evening here tonight. We'll go over all those in detail in the video tonight. Before we jump in, though, and get our hands dirty on these charts, I just want to make sure to remind you, make sure you subscribe to this YouTube channel. I don't want you to miss any of the good stuff we publish every evening on our nightly newsletter, so make sure you subscribe. And also, don't forget, if you have any questions, you can always drop those questions in the comment section below. I'll get them answered as soon as I finish up here this evening. And as always, I really appreciate you guys and gals tuning in every evening. If you're like me and you use this newsletter to get your mind right and get those charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys showing the love by subscribing, post those questions, and thumbs up if you like the content on this nightly newsletter. But enough of the introduction. Let's get this party going. Friday is right around the corner. We're going to kick off tonight's video with the calendar for tomorrow. Let's grab that Econo Day calendar and see what we got happening here on a Friday morning. Tomorrow, of course, is the end of the first week of the month of August. We've been talking about this all week here on this video newsletter. That means pretty much everybody's watching that non-farm payroll number tomorrow morning at 8:30 Eastern time, right? Like I mentioned, we've been talking about this pretty much all week. This is the biggest news of the month, right? This is the July jobs report, right? It's the number of jobs added in the month of July. Now, of course, as we go into the overnight session, it is going to be important to be very careful in the overnight, because as we lead up to this non-farm payroll number tomorrow morning, you've got to remember all the big players in the markets, they're going to start to protect themselves in the next couple hours ahead of tomorrow. That might mean getting out of positions. That might mean getting into positions to balance or hedge other positions. So there's going to be some jockeying for positions before we get that news number tomorrow. That usually leads to some really unpredictable price action. So please be careful if you're trading in the overnight ahead of that non-farm payrolls tomorrow. Now, typically what happens around that employment number tomorrow is we usually see one of two scenarios. If the number comes out right on expectations, and I won't bore you with the details on that, but if the number does come out within expectations, the market oftentimes will go pretty flat for a little while. So you have to stay patient if the market goes sideways after that news number comes out. The reason why it goes sideways if the number comes out as expected is because, well, we've known about this number all week, right? We've known what they were anticipating, and markets have a way of pricing in really big news events where we already have some estimates, right? So, as of Tuesday and Wednesday this week, we all kind of started getting those estimates on what numbers they're expecting. And so the markets will usually kind of price themselves in, right? They'll kind of manifest towards that direction. So be aware of that, right? One scenario, the news comes out as expected or within the barriers tomorrow morning, and expect it to go sideways and be a bit choppy. We'll have to stay patient if that happens tomorrow. Usually about 8:40, 8:45, you'll start seeing some more reliable price action. The other scenario is if the number comes out and surprises people, right? If it comes out much bigger than expectations that we've seen over the last couple news events, right? Non-farm payrolls, or does it come out dramatically lower? The bottom line is it really doesn't matter if it comes out higher or lower. If it comes out outside of the expectation range, and again, you can go to most news websites and get those numbers, you're going to start seeing a much more violent reaction, right, around that report tomorrow. And when it gets violent like that, when it really gets whippy like that, you've got to remember your stops are not going to protect you during that time. It'll be difficult to get a good fill, difficult getting in, difficult getting out. It'll be a dangerous environment. So you also want to stay patient. So if there's one word that keeps popping up, right, tonight as we talk about this non-farm payroll Friday tomorrow morning is be patient. Let's not get too aggressive right after that news number comes out. If it's slow and sluggish, find the new range and trade the range. If we really break out bullish or bearish, I don't care what direction, but if we do see that real strong breakout, just be aware there's a lot going on around that number tomorrow. Give it some time. So by 8:40, 8:45, we should have a pretty good idea of is it settling into a range? Is it settling into a new trend? If so, where's our direction? Where's our channel? So we'll know a lot more about the charts, obviously, once we get through the initial reaction. But the real key tomorrow is patience. Now, we don't want to spend too much time staying patient because it is a Friday tomorrow, and Fridays are all early in, early out, right? Fridays are all early in, early out. You probably have heard me say before, you've got to have a really good reason to be trading after 11 a.m. on a Friday morning. On a summertime Friday, usually right about 10:45, you can almost set your clock to it. Things will really start to slow down there as we go into 11 o'clock. Now, there may be some big moves that happen in the wake of this employment number, but just be careful tomorrow as you go into lunch and as you go into the afternoon session on Friday, because what you got to remember is the only people who are trading on Friday afternoons are people who do not know any better, people who do not have your intentions in mind, right? In other words, there are lots of spoofing, there's lots of sharks out there. If you have a big account, you can really spoof these markets and get rookies to really make some bad decisions and take advantage of them. So it becomes a very I don't want to say predatory, but it becomes it's a place where the sharks are out, right, on Friday afternoons. Again, you will notice there will oftentimes be pretty big kind of running moves on a Friday afternoon. Usually that is caused by people getting out of positions as we go into the week. So just be careful, right, on Friday afternoon. So early in, early out, give it time around that employment number tomorrow morning. Be careful in the overnight session just because of the jockeying for positions or protecting or hedging positions ahead of that employment number tomorrow. Now, we continue, of course, right, to hear more about stimulus. So that's kind of the one big known unknown right now. It sounds like they are a mile apart from agreeing on a stimulus package right now. You wouldn't know it by looking at the way gold is moving higher and the S&P is moving higher, right? What an interesting time we live in right now, seeing S&P ripping higher, seeing gold ripping higher, right? You would think those two are not really compatible, right? Shouldn't they be a negative correlation? But you know what's happening, right? Bad news is good news right now. We know that stimulus package printing money basically will pop up with gold, and of course the equities are also loving that as well. Oil's still a bit of a dog in a range. We'll talk about that in a moment, but that really is kind of the big big question mark for tomorrow. Will we get an executive order? Will we get some breakthrough between both sides of the aisle? That is definitely something that might be the big wild card for tomorrow morning. So how will the market respond to the employment number at 8:30? I don't know, but I'll be right there with you guys to trade the reaction. And don't forget, we'll be in our trade room every morning, Monday through Friday, 8 o'clock Eastern time. And what I'll do is, if you want to come out and trade the number with me tomorrow morning, I'll put the membership link for you in the description of this YouTube video. Grab that link, get registered. You better act fast though, because tomorrow morning we'll be here before you know it. We open up our trade room at 8 o'clock Eastern time with a front row seat for that 8:30 employment number. And of course, we'll keep our eye on the time because 10:45, 11 o'clock will come quicker than you think it will. All right, calendar is looking good there. You know where to get the link for the trade room tomorrow morning. All right, let's keep it simple. Let's keep it straight. Let's take a look at the charts. Got the S&P. We got some oil, and we got some gold. Gold, of course, continues to spike in range on us. Got a really simple strategy for trading gold tomorrow. Get some really nice targets we're watching on gold tomorrow as well. Oil is in a range. Oil continues to be the market that is going to be probably the most difficult tomorrow. A lot to talk about on oil regarding rotation. rotation, because it's very much depending on how we rotate inside that range in the next couple hours. You're going to want to stick around for the oil chart. But let's jump into the S&P. The S&P, boy, I'll tell you, ripping higher here, as you can see, right? Nice, strong bull move into the end of the session here today. Spent a lot of time this morning, you see, inside of that range, right? Had that kind of wacky range that we had. And, as we mentioned last night on the newsletter, I think I was pretty specific last night on the newsletter, right? We had that bull market up, right? Bears moved down, failures, and right back up again, right? So we kind of knew that once this thing pulled back, we talked about this last night, right? They never pulled back. So we kind of knew once they got that pullback, we knew people will be legging into that market here. It went right up and just never stopped, right? Just never stopped. So very well done. I got a lot of great emails from you guys throughout the day today about trading the S&P. So very, very well done for all you guys out there who were able to catch, right, that big drop. But now getting ready for tomorrow, though, what do we have here, right? What do we see? If somebody was to ask me what happened here today on the ES, I would say, well, we got buyers, right? Buyers buying dips. We got that breakout above the range. In my trade room, I call these 1, 2, 3 reversals, 1, 2, 3 momentum moves. So we definitely know the bulls are well in control of this market. Knowing that the bulls have that really strong move, we'd always expect to see a two-legged pullback and a retest of the high. Anytime I see this much strength in one direction, I'm looking for those two legs back and that retest of that high. So really my job is to find some levels of support so I can identify support and then start to look for some entry setups once we get the pullback. Now, some support levels I'm seeing here on this chart, pretty interesting, because first of all, the channel's pretty simple, right? Drawing the channel off the highs here, bringing it down right there. That channel's pretty simple. I like that channel a lot. So that's a great level of support. I also really like here that prior high, right? That's kind of the highest point before we got that big dip. That would, if I had to guess, I would guess that, right, that would be where most of the buyers would really like to get to tomorrow. We call those reversal lines, right? They're prior levels of resistance, which can then be used as support. So that really, if I had my pick of the litter tomorrow, I would look for that pullback to 33.29. But you know what? There's also one more interesting spot here I found. We'll go back to that range from yesterday. You notice that I measured the amount of the move below the range and then right back above the range here. And I'm using that, that typically is a level of resistance. But, again, we're dealing with some very interesting times we're living through right now, right? So that resistance didn't even stop them, right? But that level of resistance can be used also as support. So I'm kind of getting creative on finding some areas of support that we can use. Again, if I had to guess right now, I would guess that 33.29 is where most of the buyers would really love to get long at. Now, of course, I know where I want to be a buyer. I know where I want to get in on this, and we're definitely going to kind of piggyback off of last night's newsletter. We talked about the 3 pullbacks, right? Traps when they're shallow, failures when they're not so shallow, right? And deep pullbacks for those, what was it again? Those nested failures, right? Those failures inside of a failure, right? If you missed last night's newsletter, you definitely want to make sure you go back, right, and check that out, because we talked about those 3 pullback patterns. So I know where I want to get in. Where will my target be? Well, it all has to do with the size of that leg. Okay, that's your kind of your measurement leg. And then let's just say, for example, we do get that kind of, dream come true pullback here. That will be the leg I'll use to measure from there. So just, kind of bear with me here, because obviously if it pulls back, if we don't go all the way back, it'll be a little bit higher up. So just be aware of that, right? We don't know exactly where that measured move is yet, but we know how big, we know how large the leg will be. We just got to wait until we get that pullback, and we can figure that out once we get there. So we know we're bullish. We're very bullish right now. I want to buy a pullback. I think the only the only kind of variable right now is how far we pull back, or do we go sideways here? I've got this little trading range I've drawn up, and that tomorrow's Non-Farm Friday, Tomorrow is a summer Friday. It's Non-Farm Friday. It wouldn't surprise me if the market decided to take a bit of a nap and go sideways here. So I do want to be aware of that, right? If we do go sideways here overnight, right? We know that is a spike in range. We've talked about that a lot this week. If we do go sideways overnight, what is the best way to trade it? The best way to trade it is to look underneath the range and then what? Use those seller failure patterns, right? Breakout failures. Strong move down, wait for the moving average to come over. Sellers get short off the EMA, right? And we're buying into those stop losses. So if we do end up going sideways here, I'm looking for those seller failure patterns underneath that trading range. Also, too, it's also worth mentioning and reminding you guys also, too, if the market went sideways and then ran higher after the news comes out, what were those two breakout patterns we talked about? One of them, if you recall, was the 1, 2, 3 breakout. Let me move this up here a little bit, right? So again, if we end up going sideways here in the overnight on the S&P, again, I want to get that failure below. But, let's say we just trap low and it's run. Keep an eye out for that 1, 2, 3 breakout. Mark up that high, mark up that low, buy the low of that, right, of that new hidden channel. First test is the best test, right? That is one of the breakout patterns we like to use. The other is that 2-try breakout, right? Strong move up. This is where you've really got to have that strength going higher. Shallow pullback off the moving average, higher high, and then trap below that low. Remember that one? Yeah, we saw a couple of those today in the trade room. So strong move up, bears try once, bears try twice, shallow pullback, trap low, beautiful setup if we get that breakout. So if we do go sideways here, right? If we do go sideways here, be aware of that. If we keep grinding higher, if we keep grinding higher, that's also a scenario that I want to be prepared for. If we keep grinding higher here, that will be a spike in channel. Now, we talked about this, right? We talked about this earlier this week. What's the best way to trade a spike in channel? Wait for that deep pullback, right? Get down into some of the base of that channel. Wait for that deep pullback. That will put you below the moving average. Look for sellers to get caught, trying to get short off the EMA, buy into their stops, buy the pullbacks, and again, we know where we're trying to go, right? Up to that next measured move. That would be a seller failure into a bullish pullback if the market continues to grind, right? If it continues to grind higher in the overnight. So we got a range, we got a spike in channel, right? What if we just pull back right now? Right? What if we don't get either one of those? What if we pull back? Well, this again is right where we can go back and look at last night's video and say, what were those 3 types of pullback patterns? A shallow pullback, you'll notice we might go right into that channel. That channel is right there. So I could easily see this thing pulling back and going right back up again. So I do have this buy zone waiting down there. What would be the best way to buy a shallow pullback? It'd be a trap, right? So a shallow pullback, in other words, if we don't get down to this deep battle zone, if all we get is that shallow pullback now, what am I worried about? I'm worried about buying high. What's the best entry pattern to avoid buying high? It'd be a trap pattern, right? Trap. So 1 try for the bears, 2 try for the bears, trap, and go. Very similar to that 2-try breakout pattern we talked about just a few moments ago. Again, it's a shallow pullback. There's no question about direction. The direction is the easy part, right? We know where we want to get in. We know that, right? What I know is that if we do pull back right away, this will feel like a range. And so people will not be too keen on buying into that range. So a shallow pullback, I'm looking for that trap low. A deeper pullback, right? Now let's go into that. Right, let's go into that secondary battle zone. This is the one I really hope that we get tomorrow, right? If we get that deeper pullback now, now we've got no concerns about buying high. Now we've got sellers who will hopefully come in. They'll see that shot lower. The problem is it's way too bullish right now, right? It's way too bullish. Anybody trying to sell that first pullback is a gambler, well, or simply just ignorant to how momentum works, right? It's like this, right? It's like this back here. Market is bullish. they get that sharp pullback. These happen all the time, right? Where for whatever reason, the bears come in, they try to sell it, they fail, and the market pops right higher. That's the same idea, right? Same idea over here now. So as the market pulls back, I wait for bears to come in. They try to get short off the moving average. And now I know exactly where their stops are. Now I know exactly where their pain points are, right? Now we know how to hit them right where it hurts. And we can buy into those stop losses, okay, get those stops to get run, and then hit them again on that next pullback, right? That's a failure into pullback combination. And then the last one was, because I'll be honest, there is potential for a larger, kind of a wider channel here. If you draw off that high, draw off that low. See that little channel right there? It's a big one. That wouldn't surprise me if for some reason the news comes out and we get spooked. So what's the best way to a really deep pullback? The nested pattern. You got it. Now the nested pattern, what you want to remember is now momentum means business. Right? Now, all of that strength now says, be careful, because sellers are not going to give up without a fight. They'll try once, they'll try twice, and then we can get that buy going back up from there. Now, just a heads up on this, after we get those deep pullback patterns, and it ropes in those bears, and we're buying into those stop losses, right? We're buying into stops. What happens almost always is on this short squeeze, right? On this short covering rally, as the sellers get stopped out and the market pops higher, keep your eyes open for another trap. Keep your eyes open here for another trap. It's that same two-try trap pattern that we talked about earlier. This is called a nested failure into it will be a two-try trap pattern going higher there. Just remember, you want to get into that two-try trap before we get back to retest those highs, right? If we do get that deep pullback, you want to grab that trap entry before we go back to retest the high. That high becomes major resistance, and that's why that trap entry is so important. So 3 types of pullbacks, right? Shallow pullback is the one, right? Relatively deep pullback is the failure. Deep pullback, right? Is that nested? And again, we're keeping an eye on possible ranges or possible spike in channels as we go higher. Now, guys, I'm gonna cover this all again tomorrow morning in our trade room. We'll do it together, of course, at 8 o'clock Eastern time. But if you're not going to join us tomorrow in the trade room, you got to at least grab our free trading courses here at School of Trade. What I'll do is I'll put a little button that pops up there in the upper right-hand corner. Grab that link that just popped up. Get registered for our free trading courses. You're going to love them because you'll learn the same strategy that we use in our trade room, all my favorite entry setups, which cover all the pullbacks we're talking about, the failures, the traps, and you'll see lots of examples of how we apply that strategy to our favorite futures markets. Pause the video if you want to, but whatever you do though, before the end of the video today, grab that link, get registered as a member of our free trading classes. That way, when you come back and see me next week, you'll be able to binge on that stuff this weekend. You'll know exactly what I'm talking about when I say a trap or a failure pattern. You'll be able to see it right from watching those video lessons. And again, like I said earlier, you can always come out and join me. Come trade it with me tomorrow in the trade room, 8 o'clock Eastern time, Monday through Friday. All right, let's keep this party going here. S&P, we got you covered. How about some oil here for tomorrow? So like I mentioned earlier, oil is probably going to be the one that really takes the most amount of discipline, patience, and kind of experience as we go into tomorrow, because it is very much a range. And of course, this range really relies on rotation. Rotation. If there's one thing I've learned about with range over the past 10, almost 15 years of watching oil, or really any market, when you have a range, pay close attention to rotation. So for example, we had that big bear move down last night. It did end up kind of creating that trading range, which was basically being used for the rest of the day today. What you'll notice though is when I take that trading range, and here's where rotation becomes important, right? So we have the range there. The amount of the move below the range, right, is that large. The amount of the move above the range is equal to it. but you'll notice they never finish off what we call a pendulum swing, right? Remember, what is a range? A range is a balanced market. So when a range goes out of balance and comes swinging back into that range now, it shouldn't just stop inside the range. That momentum should carry it in the opposite direction. But if we have a lot of sellers in this example, right? For example, in this example, if the sellers are really, really strong, what's going to happen is they're going to come in and they're going to sell into that. So this is an example of where what should have happened with this rotation did not. And so right off the bat, we know that is a very bearish clue. Now, if we know that's a very bearish clue, I can also take that same amount right here and I can now project it lower. So this now becomes a really big bullseye right around that, let's just say 4170. Put that right there, 4169, 4170, right? So let's say 4170 to keep it nice and easy here. So that's kind of where these bears are trying to get to. Now, the reason why I said it's all about rotation is because it's a bear market right now. That's, I think, pretty clear. It's a bear market into a range. We've talked about this quite a bit, right? What's our plan for a range when we have a trend, right? A trend into a range. We call these spike in ranges. What's the best way to trade a bear market into a range? Sell above the high of that range using what? Using buyer failure patterns, right? We wait for the buyers to go up, let them try to buy that pullback and sell right into their stops. The other way to trade a bear market into a range is to look for the breakout patterns, right? 1, 2, 3, break down, mark that low, mark that high, find that hidden channel. First test is the best test, right, off that high. Or it's that strong move down, shallow pullback, lower low, and that trap high. What do we call those? We call those two-try traps, right? Two-try traps. So those are the three patterns I want to get here. Now, the ones going lower are easy, right? The patterns going lower here are pretty easy. These two here should be pretty straightforward for tomorrow. The tricky part for tomorrow is going to be the move that goes above the range, because this could easily change direction real fast. And you can hopefully see why, right? So we're inside the range right now. If we were to go right back up right now, what would that be? If I was to push higher here right now, would that be a good spot to sell short? Well, it would be a good spot to look for a short position, but I'd have to be very careful, wouldn't I? Why? Because we didn't finish rotation. And so that is a good example here of why, again, when you see a range, you've really got to pay attention to rotation. Because if this thing rips higher now, or even if it just kind of pushes higher here now, I have to really be careful now, because that's a very bullish clue. We didn't finish off rotation. At the same time, if the market runs and pushes through this pendulum swing, what does that tell you? You're over-rotating. We now have broken free. It's almost like the magnetic field. Imagine if one of the, there's your magnet, right? You've got this magnetic field, right? Dragging things back in. Imagine kind of like the planets in the universe. I'm not much of an astronomist or astrologist or whatever they're called. But, right, gravity keeps them, hovering around whatever you're hovering around, right? So if we can break free of that, I know that was a pretty bad example there, but if we can break free of that gravitational pull, like a magnet that gets too far away from a piece of metal, right, all of a sudden it lets loose. If we can get through that area now, we now can look for, now we know we've broken free of that range. So rotation, very, very important. So I want to be a seller, right? We're bearish. I don't want to be a buyer just yet on this. How could I trade this so I'm doing it the right way? Well, first of all, again, it all depends on rotation. So for example, if we make a run back higher here now, I'm very hesitant to get aggressive trying to sell. I love the triangle, like this whole area up here. This whole area looks great. The whole area looks great. Great level of resistance up top there. The problem is if we just go straight up, now that rotation's off, right? Now that rotation's off. So now what's the best pattern that I want to use if I'm worried about momentum? It's going to be a nested failure pattern, right? So as we go higher, all of those bulls now have momentum at their back, right? Because they failed rotation. So something obviously caused these buyers to respond, right? Something, I don't know what it might be. It doesn't really matter. It caused them to respond. They failed to rotate off of that low. Now, how do I get short? I've got to give the buyers the benefit of the doubt. Let them try once. Let them try twice. And ideally, I like to get either a trap above the high on that second try. That's my favorite way to do it. It'll trap off that high. Or if we can get a high enough trend line, oftentimes it'll be 1, 2. We go up, right? We pull back off the moving average. Buyers try once, buyers try twice, and we draw a trend line. So a trend line or a trap, the reality is you just want to sell at resistance. You want a resistance level, either a trap high or a trend line coming down. That way I can let the buyers try, right? Let those buyers get out of the system, and then I can sell back down as we go. And be aware, if this market fails to rotate and it runs up, don't be surprised if it holds that pullback and breaks out to the other direction. Now remember, we can't just buy that strong breakout because strong moves up don't equal successful breakouts. They have to hold that pullback and go. If they hold that pullback and go, if we can hold that pullback and jump, bingo. Now we know we're bullish. Now we've broken free of the magnetic field, right? If I can kind of walk back that horrible metaphor I used earlier, right? Rotating around things that are rotating, right? No, sorry about that. But we'll mark up the high, right? Bring it down to that low, and now we look for that pullback off the low of that channel, right? It's called a 1, 2, 3 breakout, right? Into a hidden channel pullback. I'm not trying to buy the first one, right? Because if you buy that one, you got to buy this one. And you can see that didn't work out very well, right? Not going to be a very reliable spot to be trading there. Wait for the 1, 2, 3 reversal, right? And we're buying off that first pullback. Now, where would those buyers be trying to go? Oh, they're trying to go back to retest those highs from yesterday, right? That 52, right? So 43 half basically on the way higher, right? So that's definitely something I'm watching for on my radar. And again, I mean, it may really rip, right? It may 1, 2, 3 and just roll. And at that point now, mark up that channel, and we're buying off that channel. Or it may spike up, pull back 1, pull back 2, right? And we're waiting to get that trap or that trend line, right? And selling short back down as we go. Now, as the market goes lower here, this is where I think things can get pretty exciting because we've got a big wide open space down here, and tomorrow's a Friday. It's a non-farm Friday. It's summer Friday. It's kind of a triple threat, Friday tomorrow. Like I said, Fridays have a tendency, if we can just kind of get a little nudge in one direction, AKA the non-farm pay report, if we can get this market to kind of kick free of this, we could easily see it get through that pendulum and, easy come, easy go. They had that big move up earlier this week. Obviously, that's a very big move down, but it's not that big. It's not that big. It's $2. I mean, come on. Oil can do $2 tomorrow on a Friday, low volume, after a busy week. So definitely possible. We'll have to wait and see if we get that. But that's where I really think we have some of our biggest opportunities here on the oil tomorrow. If they fail the rotation and we get that 1, 2, 3 rip, right, that's going to be a great opportunity here to grab that short covering rally, that short squeeze going back to retest the high, or do we get the breakout to the downside? Now, we talked about these breakouts already, but what you really want to keep your eyes on is this trend line right there, right? That trend line right there. Now, as we go lower, I can always use a crown reversal to buy off that low as long as I'm down in that buy zone. I would be looking for that trap. I really do want that trap low just because it is such a bear market right now. Whenever I'm trying to go against the trend like that, I would say that if we get a drawn out kind of a 1 and a 2, if I could really get almost a flat trend line there, I would definitely be open-minded to a nested buy off of that low. You know what I mean? But, again, that's going to require it'll require a move down, one try for the bears, pop up. The key to this one's going to be that trend line needs to be almost flat because I don't want to get into that situation where I'm trying to buy up here, right? This is not what I want. I don't want to do this one. Okay, I hope you can see the difference there. There's a big difference between those two nested failures or nested reversals. You see the difference, right? You're buying very high on this one, but if you can get down here and get one, come up, get a nice, again, almost flat trend line there. Yeah. That is definitely something that's worth the risk on that slap back up. But again, we want to get it off that trend line. Right? Off the trend line, get the pendulum swing. That's the only way I would really feel comfortable getting long in this bear market. Or we bounce, we try once, we try twice, trap low. But the traps are always, right, the traps are always my favorite because that gets you in as low as you can possibly be. It also guarantees now that sellers who are selling high, sellers who sold the breakdown, right, they're all roped in now and they're going to get squashed on the way back higher here. So there are some definite buy setups here off of that low. Just be patient for it. And then again, as we go lower, strong move down, pull back to the moving average, strong breakthrough. Right? Strong move down, pull back, strong breakthrough. Get through this area. Now we're on. Now mark up that low, mark up that high. First test is the best test. We call that what? A 1, 2, 3 breakout. Look for that short off the high of that channel. If you know what hits the fan tomorrow, if it really collapses and runs, keep your eyes on that strong move down, that shallow pullback. It'll usually barely touch the moving average, shallow pullback, and look for that trap, for that 2-try trap pattern as we go lower. Those are the key setups I'm watching for. The other thing you want to keep an eye on would be if the market was to, for example, let's say, for example, we go down to the lows, we get the beautiful nested, right? The 1-try, the 2-try, right? We get that long and it just rips. Right, so this is again where a little bit of experience will come into play tomorrow, because if we rip going higher here, there's no way I'm going to stand in front of that freight train and try to sell off that high. So you got to just remember there will be some nuance to this. Do we race higher off that low? Do we go back into the range? And do we hang out and then pop up? Because I can be a lot more aggressive on that move than I can be on this one. And oftentimes we'll see this thing just race back up with that 1, 2, 3, and you'll see, right, this kind of failure into a full rotation. And again, that opposite of that triangle is where they be headed. All of that momentum, though, will be so strong, you'll be able to grab that new channel and get a winner off that channel most likely. That is a very reliable setup because that momentum has built. Right? That's a very reliable setup because at that point now, we're rotating off that low all the way back to the high, and everybody knows, right, when you get that strong move with this wide of a triangle, it's going to be very difficult for them to keep that contained at those highs. So we do have some setups later on in the session. Be watching for here on the oil as well. We'll do more details of that tomorrow in our trade room. All right. So I tried to cover as much as I could here. Again, a lot of this is going to be based on how does the market rotate, and it's a great example of why being with me tomorrow in the trade room will certainly make it a whole lot easier. Now let's wrap things up here tonight. How about some gold? The little metal that could. Boy, this thing just keeps on chugging, doesn't it? What do we know about gold right now? And don't forget, guys, if you have any questions for me, just drop those questions in the comments section below this video. And I hope by now you subscribe to our YouTube channel. Hope you're getting all the updates. That way you never miss these videos when I publish them every evening. So what do we know about gold right now? We know gold is bullish. No shocker there, right? Easy money. We keep talking about more stimulus. As we have more stimulus, right, there's more dollars, quote unquote dollars in circulation. That, of course, brings the value of the dollar down, right? That, of course, means gold, by definition, is worth more. So gold continues its negative correlation to the U.S. dollar. The dollar keeps dropping because of the possibility of easy money, right? That stimulus coming into the market. So it's bullish. We know that is very, very easy to see there. There's definitely a range in here. Ranges are magnets, right? As we always say, ranges are magnets. What goes down comes back up. Now, what goes up may not come back down on this one because it is a bullish market. But this really kind of goes hand in hand with what we've been talking about a lot so far this week. And I don't mean to sound like a broken record on this right now, but we've talked about this a number of times here already. But if you're here for the first time, right, bull market into a range, the two ways to trade it are one, buy below it with what? A seller failure pattern, right? We wait for the price to go below the range. The range is the magnet. We wait for sellers to come in, try to get short on that breakout pullback. I used to love breakout pullbacks when I was a kid, when I was a rookie. They didn't work very well though. They seem so easy in hindsight, but in real time though, breakouts always look very convincing, don't they? Until they don't, right? Until you get in, and then guess what? Professionals go out and pick your pocket with that seller failure. So we're waiting for, in a bull market into a range, we're waiting for sellers to get caught on the wrong side of the market, below it, using seller failure patterns. And then there were two breakout patterns going higher, right? One was that 1, 2, 3 breakout, mark the high, mark the low, buy the low of that hidden channel, right? First test is the best test. Or if we don't get the channel, sometimes the market just races and it really jumps. If it really jumps up, keep your eyes on the moving average. Watch that shallow pullback, that higher high in price, strong move up, shallow pullback, higher high. That's a trap, baby. That's a trap, baby. That's exactly where buyers are looking to get long here for tomorrow. So those are the three setups that I'm really most interested in for tomorrow. I should also mention too, because we have news tomorrow, gold will probably be the most jittery in the overnight. Now, we are dealing with some pretty unique situations right now. So historically, the evening leading into and the day of non-farm payrolls is usually quite not volatile, but quite choppy and a bit impulsive on gold. So if there's one market, I know that oil has a lot of nuance to it. Oil has some rotational concerns for tomorrow, but just be aware, if gold is acting funny tomorrow, you know why. Right? You know why. It's the biggest news report we get of the month of August, right? It's July's jobs being added. So if there's one market I'd be very careful with overnight, it's definitely gold, again, because people will be kind of jockeying for position ahead of that. So there's my range, right? There's my trading range. It's a bull market. I'd love to find some support levels underneath that range. I really like this trend line. Yep, love that trend line. And really, we got one level there, one level here, one level there. I got a trend line there. As you can imagine, you can apply those three pullback patterns as we pull back, right? As we go higher, 1, 2, 3 breakout. Yep, easy. Strong move up, shallow pullback, trap low, pretty easy. Where are we trying to go? We're trying to get that measured move, I would assume. You might have noticed, there are a bunch of small legs built into this. But usually what happens is, just in case, we talk about this quite a bit in our trade room, but usually one big leg is made up of 3 small legs. You may have heard me say before, trends go 3 legs, right? Usually 3 legs. Sometimes they go 4, sometimes they go 5 and 6, right? But usually they'll go 3 legs. So there is 3 small legs there. And I thought, all right, we're going to probably consolidate those, right? Because that reaches that 2093. Now, 2093, we talked about this earlier on in the week. That was kind of the big pie in the sky target that we looked at earlier this week. And there we are, knocking on the 2093 door here right now. 2100 is right overhead. And then I have another runaway target at 2106 to 21, we'll call it 2115 up there. So if things really start getting crazy, the big round number would probably be where I would be looking most likely for tomorrow. If things really pushed right quite hard here, maybe they see it at 2106 here. Okay, so I think really the most important thing here on gold is how do we, what pullback do we get? Right, what pullback do we get? I'm not going to worry too much about this channel. This channel, to be honest with you, is not really going to help me out very much. I wanted to make sure I put that channel on there so you kind of see that if we do get that rotation, we've got that rotation back to the high of that channel. It all lines up right around that same spot. So that's a really kind of helpful confirmation up there. But think about pullback, right? Do I see a shallow pullback barely underneath this range? What's the best entry pattern for a shallow pullback? Traps. 1 try for the bear, 2 try for the bear. Yep, hit him where it hurts and right back up again. Trap. Okay, deeper pullback. Down into that trend line. Down into that, oh, I see you, pendulum swing, right? Down into this area down here now, right? Relatively deep pullback. What's the best pattern now? Yeah, seller failure into bullish pullback combination. Just make sure you stay out of the range, right? Buying the stops. Buying the pullback, seller failure into bullish pullback combination. But what if this thing really gets knocked down, right? What if it really gets whacked tomorrow at the news? Can I still buy this? I can, but now I got to wait patiently for what? Wait for 1 try for the bears, pullback, 2 try for the bears. Again, remember, the flatter that trend line, the better. Right? The flatter that trend line, the better, because you're going to be buying nice and low. As opposed to if it really slices down like this, we see a lot of these where it'll slice back up quickly, try once, go up, and then come all the way back, right, for a trap. That trap is money, baby, right? That is a great rate. And you look left in this one, you can see right here, right? Strong move down, shoot back up right there. One little trap. That is more of a trap set up because of a shallow pullback, but it's the same idea, right? It's the same idea. That trap low is used to make sure you're buying as low as you possibly can. So again, just keep it in mind on those nested failures, or right, it's that 1, 2, 3 breakout, mark that high, right, up we go from there. How do I sell this market right now? How do I sell this thing? Very, very careful. Take your buddy's account and sell that account. Okay, I'm half kidding with you. I'm tempted to say don't even think about shorting this thing, but at the same time, though, just because of fundamentals right now, it's just such a bull market here. And I just think if it does pull back, there's going to be a lot of buyers that want to buy this thing. You know what I mean? Look at that bad boy. Because, I think the biggest thing right now is you can easily draw across these highs. You can find some really deep pullbacks here. It's not difficult to find some really deep pullback spots here. So I'd love to get that nice deep pullback, get that nested, and then whoop, right back up, right, to retest those highs. But, all kidding aside, though, if things do really turn, I'm not sure what the scenario would look like to make them turn that dramatically tomorrow. But if we do see a strong move down, and then if they can hold that pullback, remember, this is where they've got to prove it to us. Because if they can't once, twice, watch out, back up into that range. Strong move down, pullback comes over, hold it, right? You got to hold it. Got to show me some strength off that. I know, trust me, it's going to be a little bit disappointing to watch it go without me, but that's the only way to do it. You can't predict it. If you're predicting, you're trading what you're thinking, not what you're seeing, right? We learn about that in those Trading 101 books, right? Trade what you see, not what you think. If you trade that first pullback, you're trading what you're thinking, right? Unfortunately. Once we see that reversal, bingo. Now I can mark up that low, I can mark up that high, and I can now start to get aggressive looking for buyer failures, right? Bull traps, pullback patterns, whichever of my entry patterns, right, will qualify off the high of that new channel. And again, like I mentioned earlier, I cover all those entry patterns in my free trading class, right? So grab that linked up in the upper right-hand corner. But whatever you do, make sure you get out and see us tomorrow morning in the trade room, 8 o'clock Eastern time, Monday through Friday. I hope I'll see you guys tomorrow there for a summertime Friday, a non-farm Friday. I'll put all of the membership links that you need below the video tonight. If you're on the blog, there's a big button below the video. If you're on YouTube right now, check the description and grab the link there. Don't be afraid to call me tonight in the office. Right? Please don't be afraid to call the office tonight if you have any questions whatsoever. And if the phone isn't a good fit for you, use that live support tool on the right-hand side, and we'll make sure we get all your questions answered. Guys and gals, thank you so much for being here this week. I hope I'll see you tomorrow morning at the opening bell. If not, please, please, please be safe around that news report tomorrow at 8:30 Eastern time. Make sure you come out and join us for tomorrow morning's trading session. If not, we'll come back and we'll do it again next week. Right, but back on Monday for a full week next week, right, on the second week of the month of August. All right, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? Have some fun out there this weekend if I don't see you guys tomorrow. And come back and see us again soon. Adios, amigos. Bye-bye for now.